Hello everyone, today I'm going to be doing a weekend review. I'm not going to be doing it live inside of the Time Vault Discord as usual because I'm not sure if I'll have time on Sunday. So I'm recording it on Saturday and hopefully I'll get it out for you today. Anyways, let's go on with the review. So right now I'm on the daily chart and first thing I want you guys to see is how we rejected off of this SIBI right here. The reason why this SIBI was important was first of all, it's a balanced price range. Why is this? Well, because if you look at this BISI right here, you can see that it lines up with this SIBI right here. When a BISI and a SIBI lines up, it creates a balanced price range once it's been traded back into. Another reason why this SIBI is important is because, well, look at this SIBI up here. Look at how this smaller SIBI's range is inside of this bigger SIBI's range. This is why this SIBI is very important. It's a BPR. And it's inside of a larger SIBI's range. And now look at the reaction off of this range. As we can see, we came to the top end of this SIBI's range and we rejected off it. After we rejected off it, what were the lows we were aiming for? Well, we were aiming for this low down here. And now look at what's happened. We've reached it. However, we closed our daily candle above this range. Is this a total confirmation that we're going to reverse? No. Because, well, look at this BISI right here. This BISI was a key BISI, and look at what's happened. We've closed below it. If we see Monday open, and then open high, and then drop down below this BISI one more time, then I'm definitely expecting bearish price action for the week. Now, the key level I'm monitoring for this week is this green candle right here. The reason I'm monitoring this one very specific green candle is because of many factors. First of all, this is a breaker block that propelled us into new all-time highs. Breaker blocks that propel us through very key levels are very key levels to keep on your chart and monitor because the reaction off of these levels are super important. And to become even more exact, I want to show you guys the exact level I'm monitoring. I'm monitoring this very small portion of this breaker block right here. Now, why am I monitoring this very small portion? Well, it's got to do with PD array stacking. So, as we can see, we've got our breaker. This is our first PD array. Secondly, we've got our BISI that runs straight through its breaker with displacement. This is our second PD array. Thirdly, we've got our SIBI right here. And what happens? Well, we have our breaker, BISI, SIBI. This creates a balanced price range. Once traded back into, is going to be balanced. So, this is 3 PD arrays. And fourthly, we have got this order block right here. One more thing I want you guys to know is if we take consequent encroachment of this breaker's wick, what we can see is it lines up nicely with all of this. So a few things that are super key to keep on your chart, on the daily chart, is quadrants of this breaker block, consequent encroachment of this breaker's wick, the whole breaker, and this little, and the segment I've highlighted here. So now let's drop down onto the hourly chart. So what we can see on our hourly chart is, as I mentioned before, breakers that break through very key levels should be kept on your chart. So if you look here, look at this breaker right here. Look at how, when we extend this breaker out, it got utilized as support. We kind of consolidated inside of it until we broke through it, and then it acted as resistance on price all the way through here. And one last time before we had this big expansion, what did? We retraced one last time into this breaker. A very key thing is the fact that we displaced away from this key level. The fact that we displaced away, and now we formed another breaker, which is this block right here, is super important. I don't want to see us displace above this candle right here. This candle is crucial. Why? Well, this candle is our breaker block that formed this run up. As you can see, we have a high, a low, a higher high, and a lower low. This is why this is a breaker. So this right here is the candle I'm monitoring. Now, what are my key targets for this week? Well, as you can see, throughout this week, what have we been doing? We've been engineering liquidity above all of these highs. This is a beautiful trend line that you could draw right here. So what is the algorithm doing? It is inducing retail-minded traders into believing that we are in a downtrend. And what are they all doing? Well, once all the retail traders are selling, where do they place their stops? they place their stops above all of these highs because we are in a downtrend. And that's what they want us to believe. So all of this liquidity that's been laying above all of these highs here is a beautiful target. I'm expecting us to absolutely blast through these highs if we're going to continue to see bullish price action. However, I don't think that this is going to be the case. However, I believe that we are going to continue to move lower. So where do I want us to move to? Well, another thing to note is although we've been engineering liquidity all the way up here, which could get taken out early on in the week, what else has been happening? Well, if you look over here, look what's been happening to these lows right here. To me, this looks like an absolutely beautiful engineering of liquidity right here. Look at all of these failure swings that are happening right here. I will most likely make a lecture on engineering liquidity because this right here shows to me that we're going to attack all of the liquidity that's been formed down here. If we start to displace through this breaker, then what am I expecting to get hit? Well, these lows down here are my final target. Why is this? Well, look how smooth these lows are. What do I mean by how smooth the lows are? Look at how this failure swing is a relative equal low. You see how close they are to each other? However, this low never takes out this low. This is why this is super important. Smooth lows or relatively equal highs or lows always get attacked. Why? Because this is an algorithmic signature in price to show that the algorithms are engineering liquidity to attack later on. If our week is very heavily bearish and we continue to the downside after taking out these lows, then I'm expecting this gap right here to get filled. And also these lows to get hit. However, this is a very bearish target. I don't think we're going to come all the way down here. Now, why do I think it's possible for these targets to get hit, although it's over 1,000-point move? Well, simply because if you look over at the economic calendar, what you can begin to see is that on Tuesday, we have PPI, and on Wednesday, we have CPI. These two high-impact news is most likely going to be used as manipulation or very heavy repricing. On Monday, this is most definitely a no trade day for me. I'm not even going to look at the charts. Why is this? Well, because if we have CPI and PPI the next days after Monday, why on earth would I be looking on the charts on Monday? Because all that Monday is going to do is consolidate and engineer liquidity for Tuesday and Wednesday to sweep. If you look in the general channel inside of the Time Vault Discord, you would see that I answered the question that I put inside of the market updates. Why do I not trade the day before high impact news? Because of this exact reasoning that I explained. The day before high impact news is most likely going to be utilized as engineering of liquidity for the high impact news to sweep and use that liquidity to then reprice to the opposite direction. So guys, please put in the general channel if you guys want me to do recorded and edited videos just like this for the week in reviews, or if you like me to do them live inside of the Time Vault Discord so you can ask questions while I'm doing these live. So I hope you guys found this one helpful, and I'll see you in the next one. Goodbye.